All right, good morning, everybody. Joe's stuck in taxi strikes this morning, so I'm going to be doing the morning call this morning. Right, so let's get started. The US had another great close, up at 2102, so back above that 2100 level, and the Dow back above 18,000, so looking very, very strong over there. We had US oil rig counts that have fallen to the lowest level since December 2010. It seems like we could have this headline pretty much every single day, because they just come lower and lower. Big news out of General Electric, which rallied over 10% as the company announced it will sell most of its real estate portfolio worth $26.5 billion to Blackstone and Wells Fargo. And it seems Blackstone have been pretty busy. They've also agreed to purchase Excel Trust, which is another real estate investment. So quite a lot of corporate action happening out in the States. All right, in Asia, we had Hang Seng and Shanghai with outperformers, both over 1%. Shanghai traded higher despite exports falling more than expected in March. We had Tencent trading really well in the Hang Seng, up 3.15% as we speak. So looking good for Naspers this morning. And then we had Australia, which was the only one that was sort of in negative territory, small negative territory, as iron ore prices continued to fall. We had Billy's and some of the other miners also falling, down probably 2.7%. So watch Anglo's, Billy's, and Glencore and the likes to open lower this morning. Chart of interest this morning, just showing the amazing inverse correlation from the US dollar and the oil price. We've had 9 months in a row where the dollar has risen, and 9 months in a row that oil has fallen on a monthly basis. April so far we up on both, so we're up on the dollar, up on oil. Obviously we still have a couple of weeks to go. Ex-div today we have Barclays Group Africa 5.25, RCL 12 cents, MTP 66 cents, Sunlum 2.25, Exara 2.10, Bidvest 4.26, CPI 5.19, WO 1 rand and 10 cents. So keep an eye on those. And then key factors today, we had machine orders month on month, came out slightly better than expected, as well as PPI for Japan. Chinese trade balance we saw came in quite a lot lower than expected. Exports also way lower than expected, and imports lower than expected as well. So interesting data out of China. All right, let's have a look at the charts. We'll start with the Aussie making a new high here, and you can see quite an interesting higher target here, looking at about 5,000 points to the upside from this channel. So yeah, we got a target of about 52,000 more or less as a possible longer term target, but a pretty big new all-time high here out of the Aussie. Right, the next one I want to show is Anglo's. Alright, so Anglo's is actually a few days ago it broke below this little bit of an inverse head and shoulders continuation pattern here, and it's been trading for the 5 or 6 days below this breakdown level. I'm not sure if it's going to reach this full target. I mean, it's quite a lot lower, although the way these lines are trading, it's possible. So we're going to be looking for Anglo's and Billy's to be under pressure this morning with the way they traded in Aussie. But yeah, so quite a bit lower target. I mean, if we had to measure the target, we're looking at 225 to 185. So that's, call it 40 rand from 185. So the 145 could be a possible target longer term in Anglo's, but I wouldn't play for that. Just know that it'll be under pressure in the short term. All right, the next one, Impala's. Impala's has been, it's just been under so much pressure. It just cannot catch a bounce, even when the other miners do. And so at the moment, consolidating in a sideways range. If we bang it up down to a 30-minute chart, We can see that there's quite a line in the sand. Hold on, let me just. Hold on 1 second. Let's see if I can. Yeah, so here's our line in the sand at around $58. Keep an eye on it. It actually broke down below the intraday, intra 30 minutes, should I say, a couple of times for false breakouts to the downside, and then rallied hard into Friday's close. So keep an eye on it. We this is definitely not out of the woods. If we get a reversal off this and close below 58, or at least get a 30-minute close below 58, there could be some short-term downside, immediate downside to 56, but who knows below that. Sanlam, let's have a look at Sanlam quickly. Sanlam has been showing a bit of an inverse head and shoulder continuation pattern. We had a bit of a false break a couple of weeks ago. It closed below that, but it's quickly regained that level. So nice, a pretty good higher target for this if it can hold this level as well. Which nice one thing about this is we've got a clear risk reward level. Close below this trend line coming up here at around 79 would be your stop loss, and potential upside target of about $6 from 79.5. So looking at about 85.5 as a possible target on the upside to Sanlam. And a lot of these domestics have run really, really hard. I'm not going to show all of them. The likes of Discovery, Mr. Price. Another one that's possibly got a little more upside is Woolies. Out a little bit in these Woolies. We've had. So we had a pretty clear breakout out of this. I guess inverse head and shoulders. It came back and tested it, and it's moving back up again. So I would say still good upside in Woolies. And again, you really want to find these quality companies and just keep buying the pullbacks on the domestic side. That seems to be the play that's been working. And that's all for today, guys. Good luck trading.